Welcome to TSAT program for IBPS General Awareness with special reference to banking and finance. And today we are learning about Indian financial system, as Indian financial system consists of money market and capital market. So, we all come to know that in the previous class we discussed about money market, which is part of Indian financial system, and once again we are just repeating you for 1 minute. So, what does the Indian financial system consist of? So, Indian financial system consists of financial institutions, financial markets, financial instruments and the financial services. So, each and every category has its own subcategories for functioning. The financial institutions are banking as well as non-banking institutions, includes developmental as well as regulatory activities. Coming to the financial markets, there are two types of financial markets, organized and unorganized. So, which is systematically organized by Reserve Bank of India is an organized market, nothing but banks where the funds are systematically organized. Unorganized means which is not systematically organized, nothing but NBFCs in the village level or in the rural level. We have money market as well as capital market also. In the previous class we discussed about money market, which is nothing but a short term market regulated by Reserve Bank of India, and the capital market is a long term market regulated by SEBI, Securities and Exchange Board of India. In the same way, we have some instrument to deal with the financial markets. The total financial system depends upon the financial instruments only, which are in the form of short term, medium term as well as long term instruments, which are useful for bonds, securities, other types of shares, debentures, mutual funds, etc. And the financial services which are offered in the society or in the Indian financial system are basically banks, which comes under merchant banking, commercial banking as well as brokerage and credit rating agencies, etc. So, these are very important part of Indian financial system. And coming to the capital market, so capital market is a long term market regulated by SEBI, Securities and Exchange Board of India. So, it plays a major role, from bringing or gathering, mobilizing funds from the savers or people who save money, and transform these savings money or the funds to the investments. So, the large scale investments in India for the economic development of the country, for the growth of infrastructure of various industries will be gathered by the capital market itself. So, here we are providing you the graph, a picture about Indian capital market. So, these are government securities, which is also known as gilt edged market, and the other one is industrial securities market, which we come across every day, which is subdivided into new issues market and old issues market, nothing but primary market as well as secondary market. And the third one is developmental financial institutions. So, these developmental financial institutions like banks or any other NBFCs, so which offer financial services for the people who invest large scale funds for the development of industries. So, these developmental financial institutions like ICICI, State Finance Corporations, Indian Finance Corporation or Industrial Finance Corporation, Industrial Development Bank of India, IDBI or UTI, Unit Trust of India. So, these are the various financial institutions, okay, for the development, exclusively for the development of industries. And the last one is financial intermediaries. These financial intermediaries will gather funds. So, they will play a major role in linking a channel between the depositors of money, nothing but savers of money, to the investors of money. Okay. So, maybe the insurance companies, mutual funds, banks also, okay, and including the NBFCs. So, these people will gather funds, okay. So, in the form of various kinds of financial instruments, okay, maybe insurance, mutual funds or venture capital funds, etc., etc., and these are helpful, okay, for providing the money, okay, to the investors who plays a major role in developing this country. Okay. So, money market and capital market are major sources of financial institutions, because these are the people who plant a money in the country. In any country, these money market and capital markets, okay, will gather the funds, okay, maybe the small scale or the large scale, and also they provide this money, transform this money, okay, for the economic development of a country. And coming to the capital market as the second part of Indian financial system. So, what is a financial system? Okay. So, what is a capital market in the financial system? So, what is the definition of a capital market? What are the features and main elements, etc., we are going to learn today. Also, we are going to learn about some stock exchanges which plays a major role in India every day we come across. Okay. So, next, what is a capital market? So, a capital market is a sub part of Indian financial system. Conceptually, the financial system includes a complex of institutions and a mechanism which affects the generation of savings and a transfer for investments. So, the main ideology here is mobilizing the capitalism is the main objective of capital market. So, capitalism, mobilizing the capital, is the main objective of capital market. The capital market is a vital of financial system, yes, of course, and the market, the capital markets provides the support of capitalism to the country. Okay. It is a main source of income for investors. So, there are lots of investors who are waiting for the funds, so that they can invest in a firm or a company, okay, so for the development of their industries. So, they have all kinds of infrastructure, okay, waiting for the capital to be invested. This capital is gathered by the capital market. Okay. So, how this capital market gets the money is the main question here. Okay. First of all, we will discuss about the definition of capital market here. Okay. So, a market for medium to long term financial instruments, and the financial instrument which are traded in the capital market includes shares, debentures issued by the central government, state governments, corporate companies, and borrowers and other financial institutions. So, these are the people who gather the funds. Okay. I said you the investors are in need of funds. Okay. So, the common man or common people who save their money in banks, in their savings account, okay, or else in the fixed deposit accounts. So, there are different types of accounts. That money will be mobilized and provided it to the other financial intermediaries, okay, through various sources, mutual funds, insurance, etc., or deposit accounts, so that the investors will invest their money, okay, for the production of goods and services. After selling them, a very good trade happens with these transactions, and they will make the money, okay, as well as it will fetch for the economic development of the country. Okay. Next, in other words, you see, the capital market is a market for securities, or securities market also we can call it. So, capital market can also be called as securities market, where instruments are being dealt here. Okay. So, the main source is the companies and the government come together and also can raise the funds, okay, for the long term purpose. Okay. The capital market includes stock market and the bond market. The bond market is regulated by the government directly, and the stock market is regulated by SEBI, as we all know that. Okay. So, the financial market overview, okay, fine, is displayed here. So, which is being subcategorized into capital market and the money market. Again, the capital market is being systematically subcategorized to primary and the secondary market. So, which is very very important for examination point of view for banking awareness. So, what are the main elements of capital market here? So, the capital market elements are of three types, okay, financial assets, financial intermediaries and the financial markets. Financial assets are also known as instruments or securities, so which are used for creation of debt in the market. So, these financial assets, okay, is a major thing here, because asset is nothing but asti in Telugu, okay, which is a fixed one. So, which plays a major role. So, current asset or a fixed asset which plays a major role. Okay. So, money as which comes under a current asset and the buildings which comes under fixed assets, both are the infrastructure or the sources of funds for the industries, which is provided by the capital market itself. Okay. So, normally we speak about financial assets nothing but the tangible or physical asset, which is nothing but immovable property. Okay. So, is one whose value depends upon its physical properties. Okay. So, the things are given more important here, like buildings, machines, furniture, vehicles and so on. So, these are the fixed assets of a company, and the current assets means which can be easily converted into cash. Okay. So, these financial assets will project the real value or property of the industries, okay, through which the funds can be easily gathered or mobilized. So, therefore, the capital market helps for each and every industry to set up its large scale infrastructure. The best infrastructure a company has, it can produce a very good best products and also gives a standard product to the market or to the society. So, therefore, the physical properties, okay, of the financial assets are very very important here. Based on that, the current assets plays a major role, that is the main objective of this. So, depending upon the nature of claim or return or instruments, okay, so these can be classified into debenture bonds as well as trust bonds. Okay. So, that depends upon the trust of a company. So, debentures or the bonds. So, debenture or the bond is an instrument, is a debt instrument indicating that a company has borrowed certain sum of money and promise to repay it in future under clearly defined terms. So, we normally learn about bonds, so in a daily life. Okay. So, if anyone is trusted, he asks us the bond. Okay. If he wants to have a trust, he asks us the bond. So, write a bond for 1 year, 2 years, etc., etc. Okay, fine. So, it is which will have a clearly defined terms in that. Okay. So, likewise, these bonds are securities which are issued by the government or any other public sector undertakings as an instrument of security, okay, that a company has borrowed certain sum of money from the people. okay, nothing but investors. Next, trust bond, okay, or the indentures, we generally call it as, is a complex and lengthy legal document. So, starting the conditions under which a bond has been issued. So, this is generally not been circulated in India. Okay. So, trust bonds. Coming to the term loans. So, it is a loan made by a bank or financial institution to a business having an initial maturity for more than 1 year. So, that is what the main criteria here. So, normally people save their money in savings account or in current accounts. If they have huge money or if they think of the future, they save in term deposits and fixed deposits. So, these term deposits or fixed deposits money will be used as a source of funds by the banks, which are nothing but made by the banks or financial institutions to offer to a business company which is having a definite and initial maturity, okay, for more than 365 days or 1 year. So, this is very important here. Okay. So, a term loan which have a maturity of more than 1 year. So, this is very important. Next, equity capital. So, equity capital is also a capital which represents the equity ownership, equal ownership, okay, so of a business. So, it is also called as equity shareholder, okay, of a company. So, this equity capital is being generated by the real owner of the company, which enjoys the rewards as well as risk of the ownership. So, we have two things here, equity shareholder as well as preference shareholders. So, we are speaking about equity capital which is being generated by the equity shareholders. So, they enjoy all the equal rights, okay, as well as the rewards and risk of the company. So, their investment is subjected to the risk of the company. So, the maximum risk they take, the maximum reward also they enjoy, okay. So, during losses or the profits of the company. So, they share equally, okay. Authorized equity shareholders or authorized equity share capital is a number of ordinary shares, okay, which a capital that a firm can raise without further shareholder approval. Means, okay, so if there is a real owner of a company, so he will take a profit from the company which is called as dividend. So, profit paid to the shareholders is called a dividend, okay, fine. So, this can be raised, okay, without further intimation to the shareholder, okay. So, this is main importance, authorized share capital, because this dividend may be in the form of shares or in the form of cash. So, real owner of the company, real director of the company, okay, will take the profits maybe in the form of shares from the company or else in the form of cash. So, the salary or profit paid to him, okay, may be converted into share also. That is why, okay, while raising the authorized share capital, his approval is not necessary. That is the main thing. Next, issued share capital. So, this is another part, the portion of authorized capital offered by the company to the investors is issued capital. So, a portion of authorized capital, so equity authorized capital, okay, fine, which is taken out, okay, for paying it to the other investors is called issued share capital, and the third one is preference share capital. So, this is given to the preference shareholders of the company, okay. So, who can be said to be a nominal owners also, okay. So, it is a unique type of long term share offered to the investors. So, it carries a fixed rate of dividend and it also ranks higher than equity as a claimant to the income and asset, okay. So, his risk is also limited, okay, according to his capital, because the preference shareholders are given the preference first. Means whenever a company gets a profit in each quarter or half yearly or annually, the first profit is paid to the preference shareholders, not to the equity shareholders or real shareholders. Okay. Once the fixed rate of amount is paid as a dividend to the preference shareholders, the remaining amount will be equally distributed among the equity shareholders. That is why they are called as equity shareholders. They equally share the profits, equally share the risk. Okay, following. So, among these equity shareholders, there are authorized equity shareholders as well as issued shareholders. Okay. Next, and another kind of share is initial public offering, which is also called as IPOs. Okay. So, IPOs are the new issues or fresh issues of shares. If any new firm is established in an industry, that industry will issue an IPO on the name of the firm. For example, Tata Industries Limited. So, it is a huge industry under which there are different types of firms on the name brand of Tata. So, if Tatas enter into a new firm, into new market, okay, so they will generate money from the capital market only. So, therefore, as a new market, they will enter into the new issues, primary market we call it as primary sources of funds to gather the funds and start the business. Okay. So, it is called primary issues market or initial public offering or new issues market. Okay. So, an old company or old industry, if it starts a new firm, then definitely it should start from the initial stages, mobilizing capital from the public. Okay. After gathering this capital, investing in purchasing of raw materials, infrastructure, setting up of infrastructure, paying salaries or wages, etc., and also involving in the production of goods and services. Then finally, once the profit comes, okay, then issuing it to the shareholders, etc. So, therefore, the amount which is being mobilized first is called as IPOs, initial public offering. So, how this happens? So, normally in the business newspapers like Financial Express, Business Line or Business Standard or Economic Times, etc., newspapers, every day we see this new issues market or initial public offerings offered by the various companies or various firms. So, that definitely needs a trust, definitely needs a market, that is demand and supply, okay, market factors, as well as they definitely need to see the inflation of the country. Of course, the growth of the country depends upon the inflation right now. So, therefore, there is a challenge for IPOs. Okay. So, therefore, the households which they save their money, okay, in the banks will be collected by the capital market and it is given to the firm sector. So, here I am giving you the graph which shows how the funds are being carried away, okay, from the households to the firm sectors or industries. So, transformation of money taking place from house to industries, from industries to houses. Okay. So, here the capital market plays a major role. Okay. People needs the consumption of goods and services. So, they make expenditure of funds. The companies needs to sell the goods and services and they want to make the savings and investments. Okay. So, this is being balanced by the financial intermediaries and the financial institutions It may be the banks, it may be the insurance companies, it may be the mutual fund companies or any other. Okay. So, these all are involved in the capital markets only. Okay. So, next, so another terminology we have come across here is convertibility. So, convertibility is a preference share capital may sometimes be convertible partly or even fully into equity shares or debentures at a certain ratio during a specified period. So, we have learnt, okay, that there is a convertible debentures and non-convertible debentures. Okay. So, debentures which can be converted into shares is called convertible debentures, and which cannot be convertible, okay, debentures or bonds are called non-convertible. Okay. So, it cannot be converted into a share, an equity share of the company, means once a debenture holders offers some money to the companies will make use of that funds, that money, and produces some kinds of goods and services and sells it and makes money and repays that money in the form of debentures only, okay, the profits to the debenture holders. So, there is a specific period of time, maybe 6 months or even 1 year. So, if after 6 months of specific period, if the company could not able to pay the profits to the debenture holders, then the company will may convert it into a equity shareholders or equity share capitals. If there is no convertibility, it will pay the debentures in the form of cash to the holders. So, there is a part of convertibility and non-convertibility. So, here the debt is being raised for the purpose of investments. So, the companies will pay the amount back. If it is being converted, okay, it is called convertible debentures. If it is not convertible, it is called as non-convertible debentures. That depends upon the interest of the company as well as the interest of the investors. Investors here in the sense is creditors to the company, okay, debentures holders we call them. Okay. And a variant in India is cumulative convertible preference shares, which combine both cumulative as well as convertibility features. Okay. So, there is a less preference for this product here in India. So, there is only two things, convertible or non-convertible. Okay. So, coming to again convertible, there is a cumulative as well as convertibility features. Okay, fine. So, but this is very less seen in India. Next, financial intermediaries. So, financial intermediaries are the institution that channelize the savings and investments. So, it creates a link between the savers of money in the financial institutions and the investors who need of that money used, okay, fine, and also offers very good rate of interest. So, a link is being created. This is what the intermediary is, okay, following. So, as institutional source of finance or income, they act as a link, okay, and the main functions is to convert direct financial assets into indirect securities. So, the assets which cannot be movable, okay, so immovable properties. With these sources, the amount, okay, can be mobilized through indirect securities, maybe through bonds, maybe through shares, maybe through debentures, okay, etc., etc. So, different types of financial intermediaries are NBFCs, non-banking financial companies, insurance companies, mutual fund companies, investment bankers as well as pension funds. So, as a developing country like India, the people of India has different sources to invest their money or save their money. Okay. So, these NBFCs plays a major role, including the banks also. Okay. So, banking, public sector banks or private sector banks. So, whichever the commercial banks also plays a major role as part of financial intermediaries. So, their main aim is to gather funds and build a link, a channel between the savers and the investors. Okay. So, as a developing country in India, we have various sources of savings and investments, okay, like banks, we have NBFCs, we have mutual fund companies, we have, and the next chit fund companies we have, okay, insurance companies we have, as well as stock market, etc., etc. So, we can save, if we have 1 lakh rupee in our hand, we can save this money, okay, or invest this money in various financial institutions. These institutions acting as intermediaries will make use of that funds. So, we have given a specific period of time, like if it is a fixed deposit, it may be for 8 years or 10 years. Okay, fine. Until this 10 years of period, if we save 1 lakh each year, it is 10 lakhs. So, we will be getting a specific period of time, okay, fine, at the same time specific rate of interest. So, depending upon that, okay, and the money which we have invested will be used for by the banks or any other financial intermediaries for investment in other markets, maybe the money market or else in the capital markets. Okay. So, frankly speaking, the capital markets is for long term, okay, fine, more than 365 days. Okay. So, under the financial markets, you see, okay, it performs a crucial function in the financial system as facilitating organizations. So, it creates the wealth, it creates the money. So, unlike the financial intermediaries, they are not source of funds, but a link, and provide a forum in which suppliers of funds and demanders of loans and investment can transact business activity. So, financial markets is not a source of funds, it is a channel or link, okay, to provide the money. So, there are two key financial markets in India, one is money market, other one is the securities market. Okay. So, securities market anyhow we have come across, sorry, so money market anyhow we have come across in the previous classes. Okay. It is created by the financial relationship between suppliers and demanders of short term funds. So, short term funds in the sense it is for 1 year, having a maturities of only 1 year or less than that. Okay. Coming to the securities market, okay, where it is a relationship created by a number of financial institutions and arrangements that allows suppliers and demanders of long term funds with maturities exceeding more than 1 year or 1 year. Okay, fine. If it is less than 365 days, it is called money market, which is regulated by Reserve Bank of India. If it is more than 365 days, it is called capital market, regulated by SEBI. Okay. So, here we provide you the types of markets here again, okay, the primary market as well as the secondary market. So, within the stock markets, within the stock exchanges, okay, so this market consists of two markets, very especially primary market as well as the secondary market. Okay. Primary market, as I told you in the couple of minutes back, that it is a new issues market or else a IPO, initial public offering, okay, where the first time shares are issued. Okay. Secondary market, okay, or the financial institutions where already the existing shares are issued. Okay. So, who regulates this primary market or secondary market? So, primary market as well as the secondary market is regulated by SEBI, Securities and Exchange Board of India. Okay. So, nothing but the stock markets we call, okay, in the general terms. The stock market is regulated by Securities Contracts Regulation Act 1956. Okay. So, the stock market is completely regulated by SEBI, okay, under Securities Contracts Act 1956, okay, as the old Companies Act 1956 and the new Companies Act is 2013, okay, following. So, here stock market functions according to the Companies Act 1956 under Securities Contract Regulation Act 1956. So, this is very very important. Okay. So, concurrently with Government of India, Ministry of Finance or else Ministry of Commerce. Okay. So, RBI also has a regulatory role with regard to the FII as well as FDIs. Okay. Because in the stock markets not only the Indian citizens will invest, also the foreigners or else the NRIs, non-resident Indians, will also invest in the Indian stock market. They will also buy and sell the shares or else debentures, okay, in the market. Okay. So, if it is from the foreign, it is called as FIIs or FDIs. Okay. So, FDI is foreign direct investments, FIIs is foreign institutional investments. Okay, following. So, these sources which comes from outside, okay, out from India in the form of money only. So, the money is automatically regulated by Reserve Bank of India. So, Reserve Bank of India will look after, okay, so the money generating in India or the money coming out from India. So, each and every rupee, okay, is being calculated by RBI. So, therefore, apart from SEBI, okay, it is the Reserve Bank of in India will look after the regulation factors, okay, of money as well as capital markets. Okay. So, whether RBI controls it is or not is secondary here. Okay. A regulation activity will be taken care by the Reserve Bank of India also under Ministry of Finance or Commerce, okay, by Government of India. So, SEBI was set up in 1988, okay, but SEBI Act was passed in 1992, okay, and the Government of India has undertaken this regulator SEBI in 1992 itself. Okay. SEBI was actually created by the industrial people, okay. So, by LIC, GIC, IDBI, IFCI, okay, ICICI, these people have come together to establish SEBI, okay, in 1988. So, the Government of India has nationalized it in 1992 and made it a regulator for whole stock market. Okay, following. So, here we learn about Indian primary market, okay, with big overview here. The main deals, okay, ideals of primary market is IPOs by the corporate sector, okay, which is in the form of equity shares, preference shares, debentures, bonds, etc., etc. Okay. So, it also deals with long term flow of funds. And next is secondary market. Secondary market consists of government securities as well as existing shares. So, government securities is also called as gilt urged government securities market. Okay. So, this stock exchange discharges three vital functions in the capital formation. One is nexus between savings and investments, marketplace and the continuous price formation. Okay. So, these are the main three pillars or three vital functions of these stock exchanges or secondary market. One is nexus, balancing between the savings and investments, building a channel, a link and balancing it. The next, finding a very good marketplace, okay, for continuous price formation. So, price stability, okay, or else increasing the price is the main objective of these securities market. So, this happens within the stock exchanges where we have three national level stock exchanges and 23 regional stock exchanges. Okay. So, among these three, two are very big or large scale stock exchanges. One is National Stock Exchange, the other one is Bombay Stock Exchange. Okay. So, these both contribute for 90% of trade. And the third one is MCXSX, Metropolitan Stock Exchange, which was recently established in 2013. So, this is a new stock exchange in India. Okay. So, very recently it was established as a third national level stock exchange. So, earlier it was only 2. So, therefore, there are nearly 700 listed companies in Indian stock exchanges, which is largest in the world. So, as part of banking awareness or general awareness, so we speak about large economies of the world or large economies in India. So, India is largest in so and so cases, maybe in largest producer of rice, largest producer of then bicycles, milk, okay, eggs, poultry, etc., etc., as well as the largest exporter of rice, poultry, etc., etc. In the same sense, okay, India is the hub for largest trading in the world. Okay, whether we compare it with US stock exchange, okay, or else whether we compare it with Japan stock exchange, okay, Nikkei. India's stock exchange is the largest in Asia as well as in the world also. Okay. So, there are 39 mutual fund industries with over 500 schemes for investment, and there are 86 venture capital funds and 56 foreign venture capital investors working in India with large scale business. FIIs, foreign institutional investors, can invest on behalf of their clients, okay, through sub accounts. So, therefore, the foreign institutional investors, they invest in shares directly. FDI, foreign direct investment, they invest in infrastructure directly. Difference between FDI and FAI in oral sense. FDI plays a major role, okay, in investing directly in the infrastructure development of the country. Means a foreign businessman can come to India and set up his own business, okay, and can run his firm or industry. Okay. So, he will establish a building and infrastructure, a property, a physical assets like vehicles, okay, etc., machinery, etc., etc., and then he will start the business and he will fetch very good profits. Example, Metro, KFC or Levi's, okay, etc., etc. Coming to FIIs, it is like sleeping partner. He will directly invest in the stock markets only. Okay. So, therefore, there are 56 venture capital investors who looks for FIIs. So, their main aim is to invest the money in the stock market. Okay. So, this plays a crucial role in growth and determining the inflation in the country. Why? Because if an FDI comes to India, it will be coming for long term investment, because he will establish his infrastructure. If FIIs, okay, are coming to India, that is investments coming to India in the form of FIIs, okay, he will purchase shares only through the stock exchanges. Okay. He will purchase shares in the company. Okay. He will act as like a sleeping partner. So, the complete investment is based on the trust. If he loses trust that a particular country is having high inflation, unemployment, high poverty, too much of schemes are implemented for the welfare of the people, okay, there is no revenue generation at all, okay, huge taxes are being collected, there is no trade at all, there is no transactions at all. In such case, FIIs will lose the trust and finally they can withdraw the money from the stock market in overnight also. So, this is dangerous. And coming to India, since 2008 onwards, during recession onwards, FIIs have become a vital role. So, that truly depends upon the trust of the company. Okay. Next, for normal FIIs, limit for investment should be at least 70% and the rest debt of instrument should be maximum of 30%. Okay. So, there are 9040 brokers in cash segment and 1064 in derivative segment of the market. So, the people who are working. Okay. So, stock brokers. So, there are 122 investment bankers in the market and there are 58 underwriters to support primary issues, the people who purchase the company's shares. Okay. Nothing but a firm or a company which purchases shares of another company is called underwriting. There are 58 underwriters working in India and 34 foreign venture capital funds with 8120 portfolio managers. So, these are the data according to the 2017. And coming to the stock markets, here the stock exchanges plays a major role in the stock markets, because in the stock markets there are stock exchanges functioning. As I said you, there are 3 national level and the 21 regional level. Okay. So, there are total 24 stock exchanges functioning in India. So, these stock exchanges like BSE, NSE, next MCX, SX. So, the coming to the Bombay Stock Exchange, it is the oldest stock exchange in Asia, not only in India, in Asia, and the second largest stock exchange in the world. Okay. It was established in 1875. It is the oldest stock exchange in Asia, second largest in the world. Okay. So, therefore, it was established in the year 1875. Next, its headquarters are established or set up in Mumbai, which is called Dalal Street. Dalal means broker. An official word for Dalal is broker. Okay, following. So, a merchant, a commission merchant we call in the market commonly. Okay. The chairman of BSE is 𝗧𝗦𝗔𝗏 and the MD CEO is 𝗧𝗦𝗔𝗍. So, these are the factual figures which we are putting to you, which may be asked in the exam. Okay. Next, index is an indicator of the stock market. Okay. For BSE, Bombay Stock Exchange, it is the Sensex which we generally call. Okay. The S&P BSE Sensex is India's most widely tracked stock market benchmark index. So, in the outer countries, when Bombay Stock Exchange, okay, is being dealt, or the foreigners when they purchase their shares and debentures in the BSE, they look for S&P Standard & Poor BSE index. In India, when we look, okay, we look for BSE Sensex, okay, S&P BSE Sensex as well as India's Sensex. Okay. So, here we generally call it as Sensex 30, where 30 large scale business firms result is taken every day from Monday to Friday and calculated, okay, whether the stock market is increasing or declining, is moving forward or backward. Okay. So, that is completely depends upon the government reforms, it completely depends upon the inflation of the company as well as growth rate. Okay. So, the Sensex will show us the indicator index, the indicator of BSE. Okay. So, Sensex 30 is generally used in India. Coming to Eurex, Eurex is another index of BSE. for trading international as well as BRIC nations. Okay. So, if the shares are traded belonging to BRICS nations, BRICS, BRICS, okay, Brazil, Russia, India, China, South Africa. So, India exclude it because in India we call it as Sensex simply, Sensex 30. Coming to world, we call it as Eurex. Okay. So, for the international trade, international market, okay, this is being created. Next one is NSE, National Stock Exchange. So, this National Stock Exchange is another second stock exchange of India, which was created in 1992 and came into effective or force since 1993 onwards. Okay. So, National Stock Exchange of India Limited is exclusively established by the Government of India only, and BSE was established by British government. Okay. It was undertaken by the Government of India, okay, in 1969 only. Coming to NSE, NSE is directly established by the Government of India. Okay. So, its headquarters is Mumbai, chairman is Ashok Chawla, MD and CEO is Vikram Lemay. He was recently appointed by Government of India on 5th June 2017, and its index or indicator is Nifty 50. So, though there are nearly 7,000 listed companies in NSE, everyday trade happens, transactions takes place. Okay. So, only 50 companies, large scale companies, data is being collected and observed whether Nifty is increasing or decreasing. Increasing or decreasing of the results, okay, for NSE or BSE depends upon buying and selling of shares and debentures by the people or the investors. Okay. So, recently it was a Diwali occasion which taking place in the country. Due to this Diwali, automatically people as an auspicious festival will purchase gold, okay, will go for real estates, will go for electronical goods, will go for clothing, okay, or also will go for purchasing shares and debentures. So, due to this large scale trade and transactions, the stock market will work, okay, will fly, will go up. Okay. So, BSE or NSE works very neatly, very, okay, energetically during Diwali occasions. So, this is commonly observed. Okay. So, wherever NSE is being concentrated in Mumbai, okay, wherever the regional stock exchanges are not functioning, okay, there NSE exists. Okay. So, there are 21 cities in which, okay, the NSE being concentrating. Okay. Following next. So, NSE establishes a nationwide trading facility for equities, for debt instruments. It ensures all investors all over the country, provides equal access through an appropriate communication network. Okay. So, NSE is being created by the Government of India, BSE was created by British Indian government, then finally it was undertaken by the Government of India. This is very, very important for examination point of view as well as for the interview point of view for the POs. Okay. Following next, MCXSX, says this is the third and the new youngest stock exchange in India. Okay. MCXSX, Metropolitan Stock Exchange of India Limited, was established in the year 2013 officially. It was founded in the year 2008, but officially it was recognized by the SEBI, okay, in the year 2013, where it is a multi-commodity stock exchange. Earlier the name was MCX, nothing but multi-commodity stock exchange. In the year 2015, its name was changed to Metropolitan Stock Exchange of India Limited, very, very important. Okay. So, there is a third national level stock exchange whose name is being changed from multi commodity stock exchange to Metropolitan Stock Exchange. Okay, headquarters Mumbai anyhow. Okay, Mumbai Kurla West. Okay, and the chairman is Ashima Goyal. So she was recently appointed. Okay, and finally we are learning about SEBI. SEBI is nothing but a regulator of stock market. Okay, so it is the Securities Exchange Board of India, which regulates the whole stock market as well as protects the interest of investors. It was established in the year 1992, headquartered at Mumbai, and the recent appointed chairman is Ajay Tyagi. Okay. So, in the examination such questions will be asked. Okay. Who is the new chairman of SEBI? What is the major role of SEBI? It protects the interest of investors, okay, as well as regulates the stock market as a whole. So, all the stock exchanges, AMFI, Association of Mutual Funds, etc., are all being regulated by SEBI itself. Okay. So, it was established in the year 1992. So, why to invest in Indian capital market? Okay. So, why do people invest in Indian capital markets? So, Indian capital market is systematically organized where its accounting standards are closer to international standards. Okay. So, SEBI, which is a strong most regulator which can even punish, okay, the fraudulent investors, has made corporate governance and also made mandatory guidelines for listed companies. So, it follows all the rules and regulations under Companies Act 2013 only. Okay. So, mutual funds are permitted to invest overseas up to $3 billion, as well as almost 100% risk free electronic settlement through depository system, nothing but DMAT. Okay. In India, transactions are totally electronic on real time business, nothing but a clear transform and transparent of money can be seen. How this amount is being transformed, okay, from savers to investments, how this money is being transparent, okay, in investment criteria in various sources of financial intermediaries can be seen. So, that is the greatness of SEBI. So, there is a magazine called Business Week which says that 100 emerging market firms which are rapidly globalizing, okay, in which 21 are Indian firms. So, this is the main cause of capital markets. Okay. So, by 2040, India may become the third largest economy, surpassing Japan even. So, already now US as well as China. Okay. Okay. And finally, what we have learned here is there is a regulatory market, systematically regulated market, there is primary and secondary markets, okay, in the world, which is also seen in India. Okay. There is a need for greater interpretation with international markets in terms of capital flows, products and processes. Okay. So, there is a need to introduce a new age financial products, okay, and to encourage participation of new age investors. Okay. So, these are the very important points which we have learnt today. Thank you.